During this meeting, various remarks may be made by management about their expectations, plans, and prospects for the future. These remarks constitute forward-looking statements for the purposes of the safe harbor provisions of the Private Securities Litigation Reform Act. Actual results may differ materially from those indicated as a result of various risk factors, including those identified in Item 1A of the company's 2014 Annual Report on Form 10-K and in Item 1A of the company's most recent quarterly report on Form 10-Q. These reports are available on the company's website at www.graco.com and the SEC's website at www.sec.gov. Forward-looking statements reflect management's current views and speak only as of the time they are made. The company undertakes no obligation to update these statements in light of new information or future events.
Hello, I'm Pat McHale, Graco's President and CEO. Welcome to our first ever virtual shareholder meeting. Historically, only a small percentage of our shareholders travel to Minneapolis to attend our annual meeting. Our goal with this virtual format is to create a more time and cost-effective option for our shareholders to participate while also providing an opportunity for dialogue through the question and answer session that will follow this business presentation. 2014 was a strong year for Graco. Total company revenues increased 11% to $1.2 billion. The strong top-line growth generated record earnings per share of $3.65, up 9% from the record 2013 results. In addition to solid business performance, we continued with our disciplined approach to capital deployment. We increased the quarterly dividend to 27.5 cents per share in 2014, and in December, we announced that the dividend would increase again to 30 cents per share in the first quarter of 2015. And throughout the year, we repurchased a net total of approximately $165 million of Graco stock. Our strategies are simple, but have proven the test of time. We invest in new products, pursue new markets, expand geographically, and make acquisitions. We executed on all of these strategies in 2014 and made our company even stronger. Our investment in new product development is approximately 3 times the rate of our peers. This investment allows us to target products for new markets, maintain and increase our technology leadership position in existing product categories, and has been an important contributor to our organic growth performance. We have a number of new market initiatives going on, which we will highlight in a few moments. We continue to grow our presence geographically with the addition of selling resources, new channels of distribution, and more customer support. We've also made a number of acquisitions during the past 18 months that provide new areas for Graco to pursue profitable growth. One of the many advantages to our virtual meeting format is that it provides us with an opportunity to highlight the bench strength of our executive management team. Chuck Rescorla is our Vice President of Manufacturing, Distribution Operations, and Corporate Development. In 2013, Chuck also took on the responsibility of establishing a new business for Graco that's primarily focused on expanding into the oil and natural gas market. We've made some good progress, and I'll turn it over to Chuck to give you some detail.
I'm excited that Graco's made a decision to make a long-term investment in the oil and gas industry. We believe there are some great opportunities to leverage Graco competencies in the design and manufacture of products for pumping, pressure and flow control, metering, and dispense of fluids that will serve demanding applications in the oil and gas industry. Graco expanded our participation through the acquisition of Alco Valves Group and High Pressure Equipment Company. Both Alco and High Pressure manufacture specialized valves used in oil and gas and in other industrial applications. We also have a team of engineers developing products internally using existing Graco competencies and technologies. We believe these internally developed Graco products, combined with the products from Alco and High Pressure Equipment Company, will give Graco a meaningful footprint in oil and gas.
Our push into the oil and natural gas market is an exciting long-term play for the company. We have a similar initiative focused on industrial process fluid handling markets. Mark Eberlein is in charge of building this business organically and through acquisition. Here's Mark to tell you a bit more.
Thanks, Pat. At the beginning of 2015, we continued the growth of our process business with the acquisition of White Knight fluid handling products. We think White Knight is a great strategic fit. On the industrial side of the business, we have a great line of pumps for chemical and broader industrial applications like water and wastewater. White Knight, on the other hand, has a very nice, high-purity, high-value line of pumps for markets like semiconductor and LED flat panel display. In between those two categories is a market opportunity that we hope to harvest with this acquisition. In our organic business, we continue to expand our offering of chemical pumps, and in 2014 we completed our lineup of polypropylene and Kynar offerings. In 2015, we plan to expand into these aggressive chemical markets with Teflon and UHMW polyethylene offerings.
In January of this year, we acquired Multimac, a small Brazilian manufacturer and distributor of finishing products primarily for the metal, wood, and leather industries. Multimac is our first production facility in the emerging and strategically important South American market. On the organic growth front, our contractor equipment division turned in another strong year, fueled by the recovering U.S. construction market and continued product innovation. Dale Johnson runs this business and will give you some insights on his product strategy.
Welcome. This is Contractor Equipment Division headquarters. This is the heart and soul of the CED business. We have 62 of the finest engineers and designers developing the latest paint spraying technology for products that we will deliver around the world. The new product development process has been a lifeblood of CED for many years. Typically, we average in the neighborhood of 20 to 30% of our sales are new products that were launched in the last 3 years. Here we have one of the examples of our new UltraMax line of sprayers designed for the painting contractor and the type of work that they did. This is one of our life test cells where after the engineering department designs and develops a new product, we bring them into this room and actually destroy the products to ensure that they're the highest quality for our customers. Well, I hope this gives you some insight into CED's product development strategy. And in 2014, this factory and this engineering group launched over 100 new products into the marketplace. So just imagine what 2015 is going to look like.
The contractor segment wasn't alone driving strong organic growth in 2014. Our lubrication and industrial segments also performed very well. Mark Sheehan is the Vice President of our Applied Fluid Technologies Division, part of our industrial segment.
If I had to boil it down to a couple of things, I'd say our successful new product launches and our expansion into new markets really drove the results. The launch of the new reactor was important because it drove new technology into a marketplace that was hungry for data. The reactor is used to apply spray foam insulation in a lot of different settings. The nice thing about the new unit was that we were able to take a lot of the data that is occurring on a job site and record it. Nobody else in that industry has that technology, so it's unique to Graco. Another exciting new area for us, expanding into surface preparation by acquiring two businesses, Eco-Quip and Geoblaster.
Vapor abrasive blasting is an interesting niche in the blasting market. It's a good fit with our high-performance coatings and end-user base and channel. And we believe we can add value and grow in this new market for Graco over the long term. With several years of strong top-line growth in a row, 4 key U.S. Graco factories were approaching production space capacity in 2014. In order to provide growth space for all in a cost-effective manner, we decided to centralize our finished goods inventory into a new, leased 250,000 square foot warehouse facility located close to our contractor division factory in Rogers, Minnesota. During 2014, we relocated the finished goods and shipping activities for 2 of our factories to this new facility. During the next 12 months, we will complete the installation of state-of-the-art warehousing equipment and processes and move the finished goods from the remaining 2 factories. This positions us well for a few more years of growth. We overcame numerous challenges in 2014, and the results speak for themselves. And if there's one thing that we can all be certain of is that we'll face additional challenges this year, including foreign currency headwinds, continued geopolitical unrest, and strong competition worldwide. But I remain confident in our strategies, our people, and our distributor partners. Working together, we expect to deliver continued top-line growth in every reportable segment and every region. And with success comes reward. Our dividend is strong and growing. Our businesses around the globe are prospering, and our commitment to you, our shareholders, is unwavering. Thanks again for your confidence in our company. I look forward to answering your questions in the live question and answer segment.